Bitcoin is making a comeback. Is the cryptocurrency swoon complete? Bitcoin's value plummeted by more than $100 billion in less than an hour on Wednesday, the steepest drop in years. However, its rebound over the next 24 hours has been equally dramatic, with prices remaining above $40,000 on Thursday morning following a day low of $30,000 the previous day. Indeed, a trader who went to bed on Tuesday night and did not check his account at all on Wednesday will be unaware that any drama had occurred. Bitcoin was priced at $41,800 at 11 a.m. Eastern Time on Thursday, approximately the same price as it was at 9:30 p.m. on Tuesday. It was up 13% in the previous 24 hours. The new money in crypto could be less susceptible to market volatility than institutional investors were in 2017. Ether, the second largest cryptocurrency by market capitalization, was up 16% after a nearly 20% loss on Wednesday. Dogecoin surged 15% after Elon Musk, CEO of Tesla, TSLA, tweeted "How much is that Doge in the window?" Coinbase Global, COIN, and MicroStrategy, MSTR, both of which have a significant stake in Bitcoin, were up 2.5% and 3.3%, respectively. Both companies' shares dropped on Wednesday. There was no consensus on the cause of the latest decline, though some analysts suggested that China's renewed crackdown on cryptocurrency trading and mining may have been a factor. Musk's latest ambiguous statements about cryptocurrency haven't helped either. While there was no single catalyst for the moves, there have been a number of headwinds for Bitcoin since its April peak, and the latest Chinese move on the issue has fueled broader concerns that regulators more broadly may move to restrict the use of cryptocurrencies, not least in the aftermath of the Colonial Pipeline attack, which resulted in a ransom that was reportedly paid in crypto, Tsai said. Even in the face of the collapse, Bitcoin veterans seemed unfazed, considering the asset's background of uncertainty. There are few asset groups where a few $100 billion are wiped out and everyone instantly takes to Twitter to make jokes about it, Angus de Champion Crepney said. Market fluctuations would have little impact on long-term holders of this. If it increases, they will be optimistic. If it declines, they want to be optimistic and demonstrate that this indicates opportunity. Since 2013, Crepney has been monitoring the room. He previously led A's blockchain division, which specialized in banking, and is now Chief Technology Officer for C Vertical Bar T Group, a political and business consulting firm that specializes in digital assets. The sell-off was a wake-up call for new crypto investors, but one that the market is more likely to weather today than it was in 2017, when a late December fall sent prices into a years-long tailspin. This is highly improbable to be the end of the bull run, wrote Philip Gradwell, chief economist at Chainalysis, a company that monitors activity on cryptocurrency blockchains. Prices are historically high, and the stakes are far higher than in previous market declines. Gradwell reports that $410 billion has been invested to purchase existing Bitcoin shares, with $300 billion representing a loss to investors at rates below $36,000. That is a level that current investors are likely to attempt to protect in the absence of industry-devastating news. One indicator he uses to decode industry sentiment is the amount of Bitcoin transferred from wallets to exchanges. Large investors often transfer funds to exchanges prior to selling. So far, Less funds have been transferred to exchanges than in previous sell-offs, implying that institutional investors are less likely to liquidate their assets. The on-chain data indicates that retail investors are selling on exchanges, although institutional investors are simply not buying as much as they used to, while some have begun to buy the dip today, Gradwell wrote on Wednesday. The stakes are significantly higher now than in the past, he wrote. With so far more money invested in Bitcoin over the last year, $410 billion versus $110 billion, there is incentive and funding to solve the issues preventing cryptocurrency from maturing. Naturally, the Bitcoin market is opaque. Gradwell and other researchers can only analyze what they can see. In recent months, analysts have attributed declines to unregulated crypto derivatives trading in offshore jurisdictions. These exchanges allow investors to purchase with leverage, and those positions will quickly unwind during a sell-off due to margin calls. Unregulated retail crypto trading is a less significant part of the market today than it was 4 years ago, but it is still a significant part of the market, which results in these large down moves, Matt Hogan, Chief Investment Officer of crypto fund provider Bitwise Asset Management, said in an interview. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.